You're watching Silver News Daily. Subscribe for more.
Everyone is getting really bullish, and this is what the market is best at doing, is getting everybody really bullish again and get them sucked into the market just before it rolls over and goes off a cliff. And we're seeing big distribution selling.
Everyone's looking at silver right now, and they're panicking. The price is diving, insiders are dumping, and retail traders are left scrambling, wondering what just hit them. But what if I told you this isn't just a crash, it's a setup? A perfectly timed smashdown, engineered to shake you out of your position right before silver's biggest rally in decades. Think about it. Insiders don't sell at the bottom. They create the bottom. They're offloading paper silver, not physical silver, while the headlines scream collapse and the retail crowd stampedes for the exits. Meanwhile, those same insiders are quietly positioning themselves for the real move, the historic rally that's just over the horizon. You need to ask yourself, if silver is really dead, why are the fundamentals stronger than ever? Why is physical demand at record highs? Why are long-term forecasts pointing to $50, $77, even $88 an ounce? Maybe because this crash isn't the end. It's the beginning. Stay with me, because by the end of this discussion, you'll see why the real opportunity is hiding right in plain sight.
Yeah, well, I think gold was a little bit of a crowded play. I think the whole kind of world economy, when they get nervous, they move to gold. So that is, that's where I think a lot of emotional money has been moving, and there's been a lot of FOMO. A lot of people I talk to who aren't in gold have been painfully watching it go higher, and they all want to get in. And so I think we're just seeing some profit taking. We've had the news with the tariffs, kind of another delay, a pause of tariffs. And so that is strengthening the US dollar. The dollar is going up, so gold's falling in kind of the inverse relationship. So we're just seeing, I think, some profit taking, people moving out of that play, thinking there might be some good news that come out of the China tariff deal down the road. So I think it's just that everybody who piled in is now nervous, and now they're kind of quickly pulling back the reins. And, whatever moves up the most is usually the one that pulls back the most. And gold has definitely been outperforming. Silver has been struggling. And so that's, I think, the reason for silver really just holding its ground today while gold kind of takes a bit of a beating.
The signs were there if you knew where to look. Over the past few months, a quiet but massive exodus of silver insiders has been unfolding behind the scenes. Hedge funds, institutional players, even executives tied to major mining operations have been offloading their paper silver positions, not because they believe silver's fundamentals have deteriorated, but because they know the game is rigged in their favor. They understand that to drive silver to new heights later, you first need to create maximum fear now. This isn't a sell-off driven by logic or fundamentals. It's a coordinated shakeout. Insiders see the explosive upside potential in silver over the coming years, but they also know the easiest way to maximize their profits is to scare the retail traders out of the market first. By creating panic today, they ensure they can reload tomorrow at rock-bottom prices. It's a dirty trick as old as the markets themselves. Force weak hands to sell low, so the strong hands can buy it all up before the next leg higher. And make no mistake, this insider selling is setting the stage for one of silver's most violent reversals in modern history.
Yeah, I mean, if we take a look at the gold market, if we pull up gold here, gold has had a very nice move. It's recently pulled back. We've been slowly kind of actively trading this. We did get into a gold trade. We closed some out a few days ago, and gold has kind of made this, is having a pause. This is a significant level. Gold could still consolidate here and move up based on the charts. Gold has the potential to rally to $3,750, which is a substantial move to the upside from where we are right now. That's somewhere up to this range. So gold is in a bull market phase. You don't want to bet against it. What's really interesting, Elijah, is when we look at the monthly chart of gold, and and kind of zoom out on the big picture. I think you and I may have touched on this before, but I use Fibonacci extensions, which is the golden sequence, to identify where price targets for gold are to the upside. And we've hit multiple 100% measured moves in gold over time. And these levels that I'm drawing are kind of where gold has hit rough Fibonacci targets. And what's really interesting here is each time we've hit a target and then gold has blown past it and become that kind of crowded play where we really just see it kind of drift higher and move up. Each time it's done this, including the big one we've seen right now, has been about 22 to 24% move to the upside from the 100% targets we were looking for. And so I find it very interesting that each time we've done this, we've gone into a multi-year pause or a financial reset. And it's not that everybody in the world is like piling into gold. It's actually, a very tiny percentage of most portfolios, most advisors. But the thing is, people who do hold gold right now, they know we're in a bull market phase and they don't want to sell it. And so it doesn't take much buying for gold to just quickly drift higher, because anybody who has it says, well, I'll sell it to you, but give me, pay me through the nose for it. And so that's why we see gold in these phases here drift higher very easily.
If you think this crash is organic, think again. What's happening right now is a textbook case of market engineering. The insiders know that to drive silver lower, all they have to do is trigger a wave of fear among retail traders. And the best way to do that is through price suppression and negative sentiment. First, they quietly dump paper contracts in the futures market, creating a sudden supply shock. Then, they feed bearish narratives through mainstream financial outlets, ensuring that fear spreads like wildfire. As retail traders panic sell, the insiders accelerate the downward spiral, using algorithmic trading and stop-loss hunting to magnify the crash. It's not about fundamentals. It's about emotion. Fear is their weapon. And when everyone is convinced that silver is dead, that's when the real setup is complete. Because while the retail crowd is busy liquidating their holdings, the very players orchestrating the crash are waiting patiently to scoop up the physical metal at a fraction of its true value. This isn't just a market correction, it's a deliberate, calculated ambush.
So I am, based on that, short-term wise, as I told you, I think there's potential for gold to maybe push a little bit higher. But overall, based on historical price action and percentage moves, it is indicating that gold may have actually kind of had the top here, and we're going to see a bigger pause and correction with the overall economy and the stock market, and pull back and give us a pause. The last time we've had a pause like this, where we went into an economic kind of crisis and a financial reset, was in 2008, and gold pulled back about 34%. So in a perfect world, that's what we'd see here. We see gold pull back with the stock market over the next 4, 5, 6 months, and then gold would probably be off to the races after that. So short term, you don't want to bet against it. It's still bullish, but when you look at the big picture, all the signs are there, including these monthly charts, these candle wicks. If we just zoom in, when price runs up and then gets slammed down and then runs up again and gets slammed down, that's usually a sign that the market is a little bit exhausted. And the big question is this an exhaustion move and it's going to break down and unwind like I think it might? Or is it just a pause, a consolidation before it pushes up for that next leg higher? And that's the nice thing about technical analysis is we follow price. We don't pick a top or a bottom. We just wait for a trend to start or continue, and then we jump on and trade that. So I'm still bullish on gold, but you got to be aware it is in definitely a unique situation of, there's limited upside and potentially more downside or wasted time if you were to move into it right now. It could take a little while to mature before it has the next big leg to the upside.
While the crash looks devastating on the surface, a deeper look at the charts reveals a completely different story unfolding beneath the chaos. Zoom out, and you'll see silver isn't breaking down. It's building pressure inside one of the most powerful bullish patterns the market has ever seen. The 50-year silver chart is showing a massive cup and handle formation, a pattern that historically signals explosive upside once completed. And right now, silver is at the very edge of the handle, pulling back just enough to trap the weak hands before it unleashes its next major move. Technical indicators across multiple time frames are aligning perfectly. Momentum oscillators are bottoming, volume profiles show accumulation, and support levels dating back decades are still firmly intact. This isn't the death of silver. It's the classic final shakeout before the true breakout. Insiders know this. They aren't betting against silver long term. They're simply creating the perfect launchpad by flushing out as many unsuspecting traders as possible. When silver reverses from this engineered crash, the move higher
There's a lot going on in these charts, and I've been talking about this for a little while here. This previous high that we've seen on the S&P 500, it's the same on almost every sector, and even the NASDAQ. This pivot high I was talking about, the market is going to want to try to run and break through that. And if it does, it's going to create a short squeeze. So everybody betting who's bearish, betting on this market rolling over and selling off and profiting from falling pricing, well, they're going to want to get out because that is a major resistance area. And today's news is it's got everybody feeling really good. People went from thinking we were in a, super bearish, markets are going lower, to today a pop-up on news with tariffs. And now people have completely flipped the script and they're like, how long until we've entered a new bull market? Like, is it going to start this week or next week? And, things are all good, the tariff stuff. So that it's a big warning sign. And there's a few really interesting charts to kind of share here based around this. If we take a look at, let's take a look at this chart. So the top chart is the S&P 500 monthly chart, and the bottom chart is the same, except for it's where we are right now, 2025. And if we look at what happened in 2008, where the stock market put in a top and then sold off 57%, when we had that first big break to the downside, we saw this blue line spike. And this is, I've overlaid the Google search term bear market of people typing it in, searching. And we've just seen the same thing last month, where the market had its first big crack to the downside. We saw the first real wave of true panic selling. The stock market crashed with 4 days of panic selling. And, if we actually take a look at gold for that exact same time frame, and this goes to show why most commodities and everything are directly linked to the stock market. Those 4 days of panic selling were these 4 days for gold. And as you can see, when there is bear market type selling, gold gets pulled back with it. So if we do enter a recession and the market goes into a bear market and a financial reset, I believe gold is going to have a haircut and go lower. But what's really interesting is we have this same spike right now going on of people searching for a bear market. And it's funny, you look online and so many people are saying, well, everybody's searching for bear market. Everybody knows one is coming. That means it's not going to happen. They've already sold and now they're getting ready to buy. But it's not the way that I see these giant cycles, as you and I have talked about, these stages that happen through the market, Elijah. There's 4 stages that you and I have touched on. And more or less, we're in a stage 3 topping phase, and then we're going to go into a stage 4 financial reset. And this is a financial reset is usually global. The whole world suffers. There is no stopping this tide. When the tide is going down, just because we know it's going to go down at a specific time, doesn't mean it's not going to go down because we know it. It's a tide we can't control. And this economic tide, I think, is slowed. And now we're going to see the economy sell off. And just as you mentioned with a potential bear market rally, that's exactly what I think is happening. When we look at the stock market, this is the weekly chart of the S&P 500. We have bullish environments, bearish environments in 2022. We've now entered another bearish environment, and we're having this dead cat bounce that I believe will eventually roll over and sell off, and we could see a pretty big wipeout. And it's this sell-off here that will suck precious metals down temporarily and give everybody a great opportunity to get into the precious metal space even more and watch it start to take off. So that's my take on where the stock market is and how kind of it relates to where gold is.
The futures market is where the real silver games are played, and right now, it's revealing exactly how this smashdown is being orchestrated. Over the past year, the concentration of short positions among the biggest players has reached alarming levels. These aren't your average traders. These are the heavyweight banks and institutions who have been suppressing silver prices for decades to maximize their control over the market. By flooding the futures market with sell orders, they create an illusion of overwhelming supply, dragging down prices and igniting fear-driven selling among retail investors. But here's the twist. Even as these shorts grow larger, the underlying futures data shows something remarkable. Physical deliveries are increasing. This tells us that while the paper market is being used to smash prices, real silver is quietly being pulled off the exchanges and into private hands. It's a setup so perfect it almost seems scripted. Smash the paper price, scare the public, accumulate the physical. And when the moment finally comes that the paper games collapse under their own weight, the physical silver holders will be the ones holding all the cards.
Yeah, percentage-wise, it usually falls a lot sharper than gold. Like you're looking at least twice as much. It'll probably fall as gold percentage-wise. So it's not immune. It's an even smaller market. Once panic selling hits and there aren't people looking to buy it and everybody wants to sell it, it drops like an elevator shaft. As you can see, it takes a staircase up and then the elevator down. It'll do the same thing eventually. If we do go into a financial reset, it will get wiped out and brought down back to some very, very, I think, critical levels. I think we would see it back down in the low 20s, which would be a great opportunity in the grand scheme of things. We zoom way back on the silver chart. As you can see, it is a rough ride. Whenever there's panic selling in COVID, we saw it sell off very sharply as well. It creates these short-term opportunities down like 30, 40%. So I believe we could see it back down in these low 20s. And just because it's holding up, as you and I are speaking today, while gold is crashing and falling like 3%, doesn't mean it's immune. It will eventually have selling pressure and the bottom will fall. And it'll become an opportunity to accumulate and stack, build more stacks going forward.
All eyes are fixated on silver's descent toward the $20 mark, but very few understand what that price truly represents. It's not a floor signaling collapse. It's a launchpad for one of the greatest opportunities silver investors may ever see. Historically, silver's most parabolic moves have always come after brutal, punishing corrections that convinced the majority the bull market was over. The $20 level is critical because it sits just above the major long-term support zone that silver has respected for decades. This isn't a breakdown, it's a springboard. Every indicator that matters, physical demand, mining supply deficits, macroeconomic trends, still points to explosive upside ahead. Silver touching $20 is not a sign to run. It's a flashing neon sign for smart money to back up the truck. Insiders know this. They're manufacturing panic now so they can quietly reload at the most advantageous prices. When silver bounces from this level, history suggests it won't just recover, it will ignite, leaving anyone who sold during the fear cycle desperately trying to re-enter at much higher prices.
Yeah, so gold and silvers generally should hold up a little bit. The gold may still want to push higher as the stock market here struggles. I think in the next 1 to 3 months, I think we could see the stock market really stall out and start moving sharply lower. And once it starts to pick up speed to the downside, that's when that fear is going to start to ramp up, and then precious metals will pull back. So we are still in a sweet spot where gold and silver can hold their value and move up, even if the stock market starts to sell off here over the next month or so. But eventually, when the fear hits a certain level, everything kind of gets sucked down with it. So I think we're within a month or 3 window where you got to be aware that both stocks and precious metals could be falling precipitously together.
While paper silver prices are plummeting, the real story is unfolding in the physical market, and it's one insiders are working overtime to keep quiet. Physical silver inventories are drying up at an alarming pace. Premiums on silver coins and bars remain stubbornly high even as spot prices collapse, a glaring signal that true supply and demand dynamics are wildly diverging from the paper market fiction. Dealers are reporting shortages, delays, and rising wholesale prices, revealing that the crash we're witnessing is purely a paper-driven event. Meanwhile, institutions and high net worth investors are buying physical silver hand over fist, taking delivery and removing it from the system entirely. This quiet accumulation isn't happening by accident. It's a strategic move designed to lock down real assets while the public is too distracted by collapsing charts to notice. When the dust settles and investors realize how little silver is actually available, the scramble for physical metal could drive premiums and prices to levels most people can't even fathom. And by then, the insiders will already be holding all the real silver, and the retail crowd will be left holding worthless promises on paper.
Yeah, I mean, I think it kickstarted things. Things way before this, and you and I have talked about this for months, well before all this started, is everything that I follow, from the technicals of different money flowing between different assets and different commodities, all the way to like real estate and economic data, has been showing to me that it's been slowing. The tide has changed. It's gone from, strong economy to a kind of a sideways weak economy, and I believe everything now is sloping down in terms of all that kind of data. So things were slowly breaking down and weakening. And then I think the whole tariff thing was just enough to kind of, snap that trend and kickstart that first drop. And so now the markets are trying to claw their way back up. And the news that we have going on right now with the China and the US, this huge pop in the equities, is sending price up towards 150, 200-day moving average. It's broken a previous high from a month or two ago. Everyone is getting really bullish, and this is what the market is best at doing, is getting everybody really bullish again and get them sucked into the market just before it rolls over and goes off a cliff. And we're seeing big distribution selling. Institutions are unloading massive volume in overnight trading. Stock market was trading higher overnight. We keep seeing big bouts of high volume selling on the futures markets. And during regular trading hours today, the market's getting hammered. And then with big selling, and then they let the market drift higher. Retail buyers think we're starting a new bull market. And so the institutions are unloading into this buying pressure. And this news is exactly like what happens to the average investor. It gets them all excited. They get long, and then the market reverses and crashes a few days later. And they're like, how did I just buy this high again? And the market's falling. So that's what people need to be aware of. And we're seeing it on even our custom indicators. It tells us that there's FOMO in the market. If people feel like they're missing out and they don't care what price they pay for stocks, we have that spiking today. And every time we see that spike, the market takes a pause or pull back. And it's a warning sign to be very cautious.
Behind the scenes of this orchestrated smash down, three major forces are quietly setting the stage for silver's next historic surge: inflation expectations, gold's strength, and the USD's bottoming process. Inflation isn't dead, it's evolving, and long-term inflation expectations continue to rise steadily, fueling demand for hard assets like precious metals. Gold, silver's leading indicator, remains firmly in a confirmed secular bull market, holding its breakout levels despite all the market chaos. And the USD, often overlooked, is stabilizing after years of decline, signaling a weaker dollar ahead. A perfect environment for silver to thrive. These intermarket dynamics are the heartbeat of the precious metals bull market. And, right now, they're beating louder than ever. Insiders know that while silver's paper price is being manipulated lower in the short term, the macroeconomic backdrop is building unstoppable upward pressure. Retail traders fixated on daily price swings are missing the bigger picture. The foundation for the next silver supercycle is not only intact, it's strengthening. And when silver finally responds to these forces, the move will be swift, violent, and utterly unforgiving to those who hesitated.
Yeah, I mean, I think Buffett's probably got a pretty good team of what's going on. We've been raising cash for long-term investing account. We're all cash. I believe inflation is here to stay for a while. I think it could go up. I think interest rates are going to hang in tight where they are, or push actually higher and kill the price of bonds. So you don't want to hold bonds. I think there's a lot of downside risk there. I think one of the best plays, one of the most boring plays, is simply holding a cash position, earning 4%. If the markets have no real clear direction and there's crazy volatility, as a long-term investor, just sitting on the sidelines, earning interest, even though it may be lower than inflation, it's way better than losing your shirt and giving back 20, 30, 40, 50% of your wealth, and keep that gunpowder dry. So once we do have a pullback and correction, you can load up on gold, on silver, on the companies that you like, and then take advantage of it. So right now it's more so capital preservation, just like Buffett. Cash is a position, even though some people think it's not. And if you don't think cash is a position, eventually you're going to take a hit because you're going to be invested in stuff because you don't like cash. And pretty much everything goes down in a financial reset. And then you'll regret, why didn't I just step aside and, keep earning interest instead of losing everything?
One of the clearest signals that silver is preparing for a monster move is flashing right now, and hardly anyone is paying attention. The gold to silver ratio. Historically, whenever this ratio spikes to extreme levels, like the 80 to 1 or even 90 to 1 ranges we're seeing now, it has preceded some of silver's most explosive rallies. It's simple market physics. Silver is deeply undervalued relative to gold, and over time, that imbalance always corrects violently. When the ratio collapses, it's not a slow grind, it's a slingshot, with silver vastly outperforming gold in a matter of months. Right now, the gold to silver ratio is screaming that silver is one of the most undervalued assets on the planet. It's a setup so obvious that the big players are deliberately trying to distract you with fear headlines and crashing prices. Because when this ratio starts to mean revert, and it always does, silver won't just recover, it will explode, catching almost everyone off guard. And the ones who understood this signal will already be positioned, riding the wave while the latecomers scramble to catch up.
Yeah, I don't use it for positions or anything like that. I always follow the long-term charts, like the monthly charts of gold and silver, to identify what to get into. So I would think naturally silver will fall a lot more percentage-wise, and I think we'll see this gold ratio stay high or go higher, which is, in the long term, I think it's a good sign to own more silver. But overall, I don't use it towards any trading. I wait for the asset I like to carve out a bottom, start to trade up and trend up. And then I'll be like, okay, how much do I want to put into silver? How much do I want to put into gold? And then I just kind of go from there.
Looking ahead to 2025 and beyond, the roadmap for silver doesn't just suggest a recovery. It points toward a full-blown historic rally that could shatter every previous all-time high. Analysts who have studied silver's long-term cycles are projecting prices not just back to $50, but surging toward $77, $82, and potentially even $88 before 2030. This isn't hopium. It's backed by a convergence of hard data, a multi-decade cup and handle breakout, unstoppable industrial demand from green energy revolutions, tightening physical supply, and a crumbling trust in fiat currencies globally. As inflation remains sticky and central banks continue their reckless monetary policies, hard assets like silver are poised to become the ultimate safe haven. The insiders dumping today aren't giving up on silver, they're clearing the decks, manufacturing panic, and preparing for the real payday that lies ahead. By the time silver is back at $40 or $50, the media will be screaming about the new bull market. But by then, the easy gains will be gone, and the opportunity to buy at smash-down prices will be just a memory.
I've been pretty bullish on the dollar. It's been beat up from the tariffs, and a lot of, I think, investors thinking it's putting the U.S. into a worse position, and who knows, it probably is or has or done, or I don't know what it's going to do. But in the grand scheme of things, I think the president is trying to make America great again, or strong, and he's trying to level the playing fields with tariffs. And I don't know what is right or wrong. It's a huge game. In order to make things better, sometimes you got to make things worse to get to where you need to go. But I think the dollar has broken that 100 level. Everybody was watching. It made them all bearish and spooked them out. Huge volume in selling the dollar futures. Everyone was very bearish. Nobody wanted to own it. It broke a couple very significant price levels on the charts from years ago. And that also created more panic. And that to me is a contrarian play. I think it is everybody who's wanted to sell it is now out. It's broken. It's flushed the markets. And I think the U.S. is trying to firm up their country and the currency. And I think the dollar could rally here. So I like the dollar. It does look like it's moving up. And if it does, it's probably going to put pressure on gold. And we have seen the dollar rally very significantly during stage 4 declines. Every time we've gone into a stage 4 decline, the tech bubble, the financial crisis, even COVID, we see the dollar shoot higher.
The crash we're seeing right now is not the death of silver. It's the setup of a lifetime. Insiders are pulling the strings, creating a smash down to shake the weak hands and set themselves up for one of the greatest wealth transfers in modern financial history. The fundamentals are stronger than ever, the technicals are screaming opportunity, and the macro environment couldn't be more bullish for hard assets like silver. Retail investors panicking today will be the ones watching from the sidelines tomorrow as silver stages an earth-shattering rally toward $88 and beyond. Don't let fear blind you to the bigger picture. History shows that silver doesn't move gradually. It erupts. And when it does, and it leaves no second chances. If you're serious about positioning yourself for what's coming, now is the time to get educated. Stay sharp and think like the insiders who already know how this game ends. Make sure you hit that subscribe button if you want to stay ahead of the crowd. And remember, this isn't financial advice. Always speak to a licensed professional before making any investment decisions.